Hi everyone, welcome to another weekly Forex forecast for the week ending August 28th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the EURUSD, the Pound USD, the dollar versus the yen, as well as gold or XAUUSD. We're going to wrap things up with VeChain or VETUSD. It's a cryptocurrency I've been talking about and buying since June. I'm going to show you the key levels I'm watching in the short term and where I think the pair could be going over the next couple of years. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and I've been talking about this rally for a few weeks now, where we had this initial rally, we had the consolidation that formed this bull flag pattern. I was buying the pair through this area with an average of 113. And I rode this all the way up here to last week when we closed back below 119. So as you can see, we closed above the 117 area here, consolidated for a few weeks, and I was looking for a daily close above 119 to potentially take us to 120.90. However, as you can see, we got this close last week above 119, but then the very next day closed right below it. So I got out of my long position through this area for just over a 500 pip gain. Now, as I mentioned to members last week, I also got short once I saw this close below the 119 area. So I saw the close below 119. We then got this retracement into this area, and I was selling the EURUSD through here. So that position right now is only about 20, maybe 25 pips in profit, but I will go ahead and hold that for at least another day or two to see if we can get a retest of that 117 region. Now, if this retracement picks up and we get some aggressive selling pressure into 117, there is a chance we could see a break below it. However, if this retracement stays gradual and pulls back into 117, I wouldn't be surprised to see a bounce higher, even back to 119. Because right now, even though we had this false break above the 119 area, I'm really not seeing a ton of selling pressure through here. I was anticipating a close below 119 and then an immediate sell-off and retest of the 117 area, but we're just not getting that. This tells me that the uptrend here may not be over, and we could see another run at 119 over the coming weeks. But as of right now, this is a ranging market between 117 and 119. So unless you can either get in at the 117 area or near 119, this is one to kind of stand aside and wait for another breakout. Because right now, there's just not enough information here to know whether or not we are going to break below 117 or if this trend is going to continue higher. Furthermore, we're getting a lot of choppy price action through here, and the momentum has subsided. So again, the EURUSD, at least in my opinion, is one just to watch for now. I do have a short position that's still on here, but it's a small position, and I'm going to keep it that way until we get some kind of follow through down toward 117. But I'll likely go ahead and take it off there because, again, this is just sideways movement and not something I like to hold for more than a couple of days. So the pound against the US dollar has gotten incredibly choppy over the last few days. So if you've seen the last two weekly forecasts, we were looking at the 131.60 area, which was a trend line and also a key horizontal level. So we had this daily close above the 131.60 area. However, just like the EURUSD, we got a daily close below it the very next day. The next day then closed back above it, and the day after that back below it. So this back and forth right here has made the pound unfavorable, at least for me. And going forward, I've removed the 131.60 area because the pair was clearly not respecting it. And it also seems that this drift higher that we've seen from the pound has also carved an upward sloping flag. So a pattern like this is similar to a rising wedge after a rally that signals exhaustion from buyers. So if we do see the pound close below this channel support, we could see a run at 129.80 with a close below that, taking us down toward the 128 region. But just like the EURUSD, there is no momentum here. So back here was the trade. A breakout through this area like this was the long trade here in my opinion. And as of right now, we're just seeing a lot of sideways movement. So until we regain some type of momentum here, there isn't a whole lot to do. Now, if we do get a daily close below this support, you could try to trade down toward 129.80 or 128. Just keep in mind that there isn't a lot of room here to get short. And just because we see a daily close below channel support here would not indicate that this trend is over. We would need to see a close below 129.80 and even below 128 in order to signal that this uptrend is over. Until then, I like the idea of watching to see how this consolidation plays out, and if we get something favorable that shows a continuation higher, to either buy on dips or a break higher. But as of right now, again, this is one I'm just going to watch because I don't want to get chopped up in this sideways movement. The dollar yen is next, and it's no surprise, just like the euro and the pound, we're waiting for some kind of follow through here. So this is something that I've been talking about now for months, where we've had this wedge pattern on the monthly time frame, and this pattern was not being respected on the daily or even weekly time frames. So we needed a monthly close either below support or above resistance. We got that last month, and so far August is staying below that 106 area on a monthly closing basis. And that's what's key here. What happens on the daily and weekly time frames is insignificant in my opinion, because right now this has been so choppy that only a monthly close back inside of this pattern would negate this breakdown. So as of right now, as long as the dollar yen stays below that 106 area on a monthly closing basis, I like the idea of an eventual rotation lower, perhaps down into 101. But as of right now, there isn't really a whole lot to do. As I told members last week, if I was going to do anything here, I might look to get short with a stop up here above this monthly candle. But this isn't an A+ setup in my opinion, because there's just too much sideways movement here and not enough momentum. So this isn't something that I'm going to trade. I'm just going to stand aside right now and see what happens. If we do start to get some kind of momentum here and follow through from sellers, perhaps break below this August low, I might look to get short toward 101. But as of right now, there's just no momentum. Next up, we have gold, or XAUUSD in this case. And as you can see, the pair has been trending higher now for months. And I got bullish ever since April 1st, where I was buying the gold miners, junior gold miners, back here on April 1st, and I continued to buy for the next couple of weeks. Now, I also told members about this, and those gold miners are up still well over 100%, even after this aggressive pullback from gold. So ever since breaking above the all-time high, which was right around $1,900, we had this parabolic move up into 2075. Now, following that, we had this big sell-off that took gold 5% lower, and 5% in a single day is a huge move for gold. However, gold is still holding above that $1,900 area, and as you can see, it's also coiling now inside of this wedge pattern as we consolidate. Now, this doesn't mean that if gold closes below $1,900 that this entire uptrend is over, because if we look at the weekly time frame here, you can see that gold has been trending higher for years. All right, so even $1,900, as important as that level is, if gold closes below it, it doesn't mean that this entire uptrend is over and that gold is going to head lower toward $1,000 or whatever some people think. Now, that could happen. I could be totally wrong here, but looking at the long-term trend, it does look like gold has entered a cyclical bull market, which means for the next 4 to 5 years, gold could trend higher. That's just my outlook for gold. Again, I could be wrong, but in the near term, it's all going to come down to this wedge pattern and which way this breaks. So if we do see gold take out this upper level somewhere up around 1970 or so, that could send gold higher up into 2015 and perhaps 2075. Now, alternatively, if we do see a retest of the 1900 area and a close below that, do expect some weakness here. But again, you've got to be careful getting short, because that could also be a false break. If we do see a move below 1900, that could be a false break where shorts start to pile into this, and then all of a sudden we get a move back inside of this pattern and a push higher. All right, that's happened before. In fact, the March sell-off was nothing more than really a false move. We got this liquidation event back here. Everybody thought gold was moving lower. The same thing with stocks. We got this aggressive rally higher, and ever since then, gold has just been on an absolute tear. So you've got to be careful shorting gold. Even if we close below $1,900, I'm still bullish here over the next few years. And I do think in the near term, if gold can take out that 1970 area, we could see another run at 2015 and perhaps 2075. Last but not least, we have VeChain, or VETUSD. This is a cryptocurrency that I've been talking about and also buying since June, ever since VET was trading right around 0.008. Right down here in this wedge pattern, I was buying the pair through this area, and what followed was a 150% gain. Now, ever since we topped out here around 0.022, you can see where we've had this sideways movement, but given the fact that we have this uptrend that's been intact since the March low, this to me right here, this sideways movement hints at a move higher. So this could be a continuation pattern following this rally back here in July. So if we do get a daily close above 0.022, that could take us up to that 0.026 to 0.028 area, which is VET's all-time high. Now, this is a long-term investment for me. I've talked about this before, where I'm looking at the next 2 years or so. I'm not trading this one for a few days or weeks. This is a multi-year hold for me because I think that 0.02, 0.03, etc., all of this is just the warm-up phase. And given the fact that we're on the cusp of a new cyclical bull market for cryptocurrencies, I do think that VeChain is in a position to benefit massively from that bull market. So I'm still adding to my long position here. I still have that on. I haven't sold a single VET, and I probably won't for the next 18 months or so. But in the near term, it's all about 0.022. Buyers have to take that out on a daily closing basis to expose that 0.028 area. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.